The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
We've come out of a quiet weekend, but there is some weaker economic data out of China. Will the market settle down after last week's historic rally? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are slightly down this morning. Last week, the headlines were all about Dow at historic highs. Scott, we couldn't look at a paper without seeing that. So do you think the bulls can continue their run this week?
I think that this week will be a little bit more digestion type action. You can't always be up 5 days in a row, and I even think the markets are up like 7 out of the last 8 days. And if you look at the chart of the Dow, you will see, so the headlines were being printed. This was what was going on in the charts. Here was your low in November, higher low coming into 2013, and then this was that push above the historic highs. And if you look a little closer to this chart, you will see that the reason why everyone was so excited about it, because it hasn't happened in a long time. So as we go back, I'll just get you to the monthly chart. There it is. Okay, there is that old high that everyone was looking at, and everyone got so excited when we went above. That's 14,198, and there we are above it. This has been more exciting to me, the trend. The outside day that happened way back here, the higher low, higher low, higher low. So a nice trend to stick with if you were a macro investor or even an intermediate trend trader. But overall, it's nice to see the headlines. It's nice to see people getting excited about the market. I don't think people have been excited about the market in a long time.
Yeah, everybody's really excited about the market. So do you get a lot of phone calls this weekend about it?
Yeah, I think my mom was like, "Are you ready to retire?" I got a phone call from my uncle Jerry. He's like, Scott, what can I buy? So I guess maybe that's a sign that you have to pull back a little bit. But ultimately, a lot of people talk about volume. A lot of people say, oh, the volume's not here, retail's not in yet, or this or that. You know what? Don't look too closely at all the indicators. The trend has been up. There's been nice leadership across the board. There's been participation. There's been breakouts. There's been lots of type of rewarding setups on every time frame. So all in all, don't let everyone try and talk you out of the stock market, or don't just come chasing in, but learn more about it and start an approach, because there is a lot of money to be made out there if you approach it with a plan.
Has a trader's point of view about all the excitement compared to the mass media's opinion of it?
You know what? The trader point of view, every time we make a headline, it's actually like anxiety inducing, because I don't know about, everyone has performance anxiety in different ways. As a trader, you hear historic highs, you hear a stock at historic highs, and you're like, oh, I should have been more involved. I should have had more positions on. I should have had more size. So every trader gets a little introspective on how they could have handled it. So I don't think traders like those kind of headlines, because they feel like they should have done a better job. So they start to maybe look a little bit into themselves and start to change their approach. Maybe they fought the market too much during this uptrend. Perhaps they didn't grow. So I think that these type of headlines are not great for a trader's psyche. It's good for the retail investor. It's good to show that people have missed gains in the market, so maybe they come back, which could lead to more volume, higher prices, and maybe better trading that's just not controlled by computers. But overall, everyone's looking at it differently. The question is, how are you looking at it? And if you're not looking at it in a way that you think you've approached it well, make some changes, because I think there's going to be a lot of great action this year.
Well, if we're talking headlines, we must note that the S&P is less than 2% away from its all-time high of 1576. So can it get there?
I think that we should see a pause. If we could see a pause and some sideways action, I think there'll be a better base to propel from in order to get to that 1573. And if you look right here at the S&P short term to approach it now, okay, remember last week we were talking about 1530. Here is your wedge type formation. This was that ascending channel that we wound up breaking to the downside. So, if you want to talk dips, this was your first dip of 2013, and you had that red dog reversal, and I believe it was like March 26th. Okay, from there we held higher and then we took off. So now you've had 3 days of extension through there. So I would say right now, taking a closer look here, I would say some work above 1542, maybe we even dip a little down to 1538. The longer we stay above this area and let the 8-day catch back up, I do think the more power we might have if you go to this monthly chart and see what everyone's talking about right here, which is this double top. Here's 1552, here's 1576. Sometimes you get up there first time, it brings out some sellers, but then ultimately we go sideways and we don't pull in too much in this time frame. And I do think that we're going to have a lot more power to potentially get to my 1700, which I've been talking about for the past few years, of the road to 1700, and I just think it's a matter of time. Could be a few months, could be a few years, doesn't matter, just stick to a plan. So
what do you think the likelihood is that we'll get to 1700 before your earlier prediction of 2015?
You know what, it doesn't matter. I think that maybe if we keep up this type of momentum, it's going to be sooner, but I don't think we're going to have a great first quarter. It's going to go in the books at the end of this month. You can't say that the second quarter is going to be like the first quarter, same way last year. If you remember, we had a great first quarter. We said, time to get a little flexible. Then the head and shoulders pattern created itself, and then we had a 6-7% correction. So who knows what's going to happen in the second and third quarter. Don't try and make the prediction in time. And just know that that's where the road should lead to. Let's navigate it using a risk-on, risk-off approach and navigate and manage our positions and our size.
All right, well, what do you say we check the temperature of sectors on the S&P's historic highs? Let's start with the S&P financial sector, which has been the best performer. Last week, we had the government stress test, which proved that most banks could withstand a major recession. We saw some banks fare better than others. Do you think we'll continue to see money rotate into the sector?
Yeah, and this was the first divergence we've seen there in a while. The XLF is at highs, but then you have Goldman Sachs and Morgan Stanley were considered the ones weaker out of the group. So if you go to Goldman Sachs, you will see this stock that led the move all the way up had some corrective activity. And then remember, it was lagging a little bit, so it felt like somebody knew something. Anyway, traded off a little bit Friday. I would say for opportunities to buy back, as long as Goldman Sachs stays above, I would say it would be impressive to hold the 21-day, which should be buyable, and then you have major support, and then at some particular point down the road, it takes out these highs. Morgan Stanley a little weaker. I would say this is more of an avoid. I tried playing it for a breakout, before the stress test, and then kind of held in there though. So I would say for this one too, here's your macro support. Here's a little bit of support higher, and if all of a sudden now that the news is out and wants to get going, here's your high to get back to the near highs. And then lastly, this has been on the better side. Okay, Citigroup surprising. Took out this high earlier, so somebody knew something. They want to actually announce more of a buyback and a dividend. It's funny because there are so many different ways to look at it. It depends on your psyche. I had people on the Twitter sphere saying, "Oh yeah, Citigroup was upgraded today, but it's really only 460." If you calculate for the reverse split, then you have the guys who look at things with glass half full. They say, yeah, well, you could have bought all you wanted at $1 and be up nicely. So no matter how you look at it, I think it's always better to look with a bit of reality, but more opportunistic versus just, frustrated and complaining.
Yeah, the strong jobs report on Friday sparked some talk that the Fed could pull back on quantitative easing, but Fed watchers disagree. Where do you stand on that?
I think that this number was a little too hot, but I think it's one in the scheme of all the numbers, so I don't think they're ready to pull back. But the higher we go, the more participation we have, the better we'll be able to hand it off when they stop doing their 80 billion or 85 billion in buying. But overall, the Fed's done such a, have been so involved that the last thing they're going to do is all of a sudden step back and pull the rug and not have support there, because they want to have the wealth effect. They want to have the economy increase, and incrementally it's starting to happen, so I don't think they're going to pull back too early.
All right, well, let's check in on the industrials, which has also been one of the strongest sectors this year. The XLI put in a new high on Friday at 41.86. That makes 4 consecutive up days, so does it need a rest?
This one too, showing leadership. You go right to the chart here. There's been a lot of stocks in this group making nice moves, and this one's at highs. Here's your 8-day at 41.40.
All right, and construction activity is picking up on the back of a housing recovery. Stocks like Toll Brothers and Lennar are acting well, but there's been wide range bars in the XHB. So what to do in this sector?
Well, this one was interesting because this helped lead the market lower 2 weeks ago when it started to show some faulty signals. So we were able to switch gears, but then boom, just like that, it popped right back through resistance and showed that you had to have quick feet. You look at the chart of the XHB, which has had an amazing run. You look at the monthly chart, talking about all the way back, from 2011. It's starting to make some real progress. You go to the daily chart, and if you remember, this is when it broke this, upper accelerated trend line. So this could have been your nice quick, cute short, which I call it. Could have been take off some positions, and then you had to move back to the more gradual trend. You know, we talk about different trend lines. This is more of your intermediate trend line that it held. So if you sold here, you better have thought quickly and bought back or whatnot. But anyway, from here, you know, had a nice push, held higher, went above this downtrend, and you know, now a little bit of a doji, so it's not blasting off like you saw the industrials, but I do think that there's a lot of stocks in this group that remain, you know, viable and could be on your focus list.
All right, and checking in on metals, gold's been having a reverse relationship with the market, but that was not the case on Friday.
Yes, and it was like the first time that the markets were up, but I think also people thought they would sell the news in the jobs numbers, so gold tried to go when the market pulled in off the highs, and then once the market went, you know, floated back into the close, it didn't really pull off. So it's an interesting spot. You know, we talk time frames, and with the metals, you know, you had an intermediate spot. If you remember on the GLD at 161 or 160, we were playing it for potential upside and went to the downside. Well, now it's trying to hold macro support. So if you look here, you will see this was, you know, the high that was put in October. Here's your, you know, your descending channel. Here was a small rising channel, and this is when it broke. You had a nice tight wedge here, which I was trying to think it would go to the upside, and I got stopped out. So meanwhile, you know, it's come to the downside. If you look here, you will see it's trying to hover on macro support. You look here, this is the support I'm talking about in the GLD, which is about 148 to 150-ish. Okay, so we just held a little bit higher. So the question is, you know, can it change? Okay, and if you want to look a little closer to see if it could change, in order to do so, it's going to have to get above this small resistance. And this is just really incremental resistance right here. So if you're looking for a cash flow trade, here it is above Friday's high, which is 153.29. But then you have resistance here, resistance there. So it's going to take a lot for this to change character. And right now it's still on the weaker side.
All right, and the cubes also put in a new high at 69 on Friday. Is it poised to keep going higher?
Well, you know, the Qs have been a laggard sector. Okay, it was nice to see the Qs have a little bit of upside on Friday. Overall, if you want to be in technology, you know, we've talked about in different groups, you could be in different ETFs if you don't know what stocks to buy, but in the Qs, it's a little different because Apple's been so weak, and if Apple remains weak, the Qs are going to underperform. So you're better off picking out the technology stock you want to be in to create alpha versus the Qs. Because if you look here at the Qs, you will see, you know, even though it had a little bit of movement on Friday, look where it is. Look where the September highs are. You're seeing, you know, major sector ETFs making historic highs or moves through last year's highs, and this one's just hanging out right here. So you're not creating any alpha for yourself by being in the Qs. You got to pick the stocks yourself, do a bit more work. But if you do see Apple start to act better, then maybe it could play a little bit of catch up. But until then, you know, pick individual names in technology.
All right, well, coming up, we're going to go in the trenches with high beta tech. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and talking high beta tech, which has been a mixed bag, and one of the weakest names in the group, of course, has been Apple. Right now, it seems like it's hanging on to its lower end right now. Do you think there'll be a possibility of a bigger trade there this week?
Well, we're looking for it, and every time we've had like a one-day move, it's turned into a one-day wonder, besides like 2 other times since the high of in September. And I know a lot of people have been looking at it and trying to get involved if there's some kind of plan or technical setup. And right now we have this huge descending channel from the highs around 700. If you look here at the chart, this is that peak. Okay, first of all, just talk real quick trends. I don't know if you guys remember, if you've been following us out, you know, this was that quarter that they missed, and then right into that gap. And look what it did. It followed the 21-day moving average all the way to the highs here. That's why when it broke 681, that 21-day moving average, I went and said, you know what, I'm no longer in it. It's more of a trade. You could test the 50-day. Then PS went to the 50-day, 3-day bounce and failed, and that's been the story ever since, all the way down. Had a few little moves along the way, but nothing to write home about. You're better off being short at resistance, but you know, to me, that's something that I haven't been doing. So here we are. Here's your lower end. This 420 now is major support. You have 2 trend lines here. Here's one intermediate. If it can, and I don't know what's going to be the catalyst, maybe Tim Cook has to come out of his shell and say something. above 435 to 437, perhaps, you get a move back to this trend line. And if it gets above that, then maybe, it retraces some of this huge down move. But if it doesn't change and doesn't show any difference in its complexion, and Tim Cook doesn't announce a buyback or something they're doing with their cash, all of a sudden we trade below this 420, and then your next real point of reference doesn't come in until below 400, and then even down to this support, and this support all the way down here comes in around 370. So, we're coming into every week or so, there's some type of setup that traders start to gravitate towards. So I think traders are looking close to see if, we could break to the upside or boom, more downside to come.
Well, from a have-not to a have, Google has been best in breed, but it's taking a bit of a rest. So is the pullback that we saw on Friday healthy?
At this point, yep. And the only thing I don't like is that every time we walk in now, we're getting new $1,000 price targets or 950 price targets. And I know when we were trying to play it, lower when it didn't break out yet, I feel like I was long a lot, and every day I'd walk into a downgrade and it would go from negative to positive. So it's just funny how the dynamics changed. So, but if you look here now, all in all, it's had a really nice move. If you look at Google itself, this was the gap up after earnings when it started to act really well. Here's when it took out last year's high, and then it's been following the 8-day ever since. And it's trying to hold in here. I would say short term, if you want to try it, the futures are lower. The low is 825 on Friday. Maybe you buy versus that or use that as your pivot. And if it hits the 8-day, which the 8-day has been big support during this entire run, if you sold into some strength up here, I remember that day, I'm like, at 840 and change, I think it's more of a sell than a buy. Entries and exits matter. Well, we'll see. Maybe coming into this zone, it should be buyable. This will be on my radar to see if I could buy the dip here.
And Amazon has been acting very well for the past 2 weeks. It's facing 276.50 as short-term resistance, but a lot of buys now are on its all-time high of 285. So can it break above this resistance and get there?
I think last week we had a decent trade around 267. They're in the headlines today about their domain names. So I'm not sure how people are going to look at it with that. They're trying to lock in every domain name under the sun as far as reading, but whatever, that's probably just noise. So if you want to diffuse the noise and go to the chart, this was your last setup that was somewhat clean above 267. Now you're putting in a nice bull flag right here. So I would say the longer it holds the 8-day above 271, the higher the probabilities that we can get a nice trade through this 276.50, 277 to come back up and retest the historic highs there. So it's on my radar as well.
And what about Netflix? Finished the day up nearly 2% on Friday. It's been stuck in a trading range between 175 and 190 for the past 2 weeks. So what needs to happen to get it break above it?
I think just some volume, and when it's ready. You had a huge move from earnings, you had follow through. We've had some tactical trades along the way. If you recall last week, one of the Netflix bears was on, I think, Fast Money talking negatively about it. It opened lower, went higher. To me, that's more constructive than bearish. You look at the chart here, you will see here's your big gap up on earnings. Here's your flag. This was a nice little trade. And then we consolidated, went again, and now it's just really going sideways. So it's trying to hold the 21-day. I'd say the longer it stays above this 175 to 178, the higher probability is that it's going to see above 200. For today, I think it's probably off a little bit with the futures. If it can start getting through 185.85, I think some guys will be looking at it like me to buy it and then see if it could gain some strength and momentum. So I think this should be on your radar also.
Great. And LinkedIn has been a bright spot in tech. It's been on fire since earnings. So is it ready for another move higher?
This too, perked up on Friday, 4 days of rest, holding where it has to. And if you look here, I haven't seen anything really change in LinkedIn. Here's your gap up on earnings. Had to digest it. This was a nice entry around 161. Now stair-stepping higher, and here it is again. Let the 8-day catch up. Here's your support, 174. It starts getting above Friday's high. I think I'll be looking at this one too, 177.34, and it can continue. So I do see some nice base on base type of action in a few of these names.
Great. And finally, Facebook saw an inside day on Friday, closed down over 2%. What do you make of its action?
You know what, Facebook, it's tricky. Everyone talks about it. I know I did a segment with Kramer last week, and it was on the radar, and it still looks good. Would I have liked it to close stronger on Friday? Yes, and it didn't. I don't think there's anything wrong. I just think it needs more time. So if you look at the chart on a macro basis, you have this huge cup and handle type pattern where this was your resistance. And remember earlier, coming into 2013, it was on my, my hit list, so to speak, to get to 32 to 34. It happened in a month, and since then it's been correcting. So here we are. It's nice and tight. I am long some Facebook. You take a closer look in here. I would say, if you don't want to be in Facebook and you're looking for an excuse to get out, I would say if it gets below, 27.30, you could get out of the way. But but I think the longer it stays above 27.30-ish, I think the higher the probability we get a better clean trade. So if it starts to get some strength and goes above 28.70-ish, to me that would be a signal to add. I know my strategy with Kramer was, I'm long unless it breaks below 26.34, and I'm going to use that. So that's the room that I'm going to give there on Facebook.
All right, time for some quick hits here. Let's check in on Nike. What levels are you watching here?
You know what, Nike, I was long for a breakout. I actually sold it on Friday. I still think it's fine. It just has to hold, above this 54-ish area. I added on this move and then it came right back in, so it's just not ready yet. Sometimes these type of retail stocks take time. I still think it looks okay, but it's finding a lot of resistance into this 56 area.
And your thoughts on gold miner ETF GDX finished the day up over 0.5% on Friday, but still closed below its 8-day.
This is showing some signs of a small bounce. I'm not sure what day it was last week. I had that red dog reversal, and then I actually got long it. I don't get long the miners usually, just so let's go right to the chart, and you'll see this was, tried to make a low, and then, had a decent day that day, but one day doesn't make a trend. I think I took it home long, sold a little bit the following day. Now it looks like it's holding in there again. So I would say as long as it holds, this support, I'll just say above 36. 31-ish, I think maybe there's an add-on trade here. So if the market does pull in the next day or two and gold and the miners decide to follow through a little bit, I think you could be a buyer above 38 and then watch the 21-day at 38.70, and then bigger resistance comes in right around 41 and change.
Last week we talked about how casino stocks were waking up a little bit. Las Vegas Sands, no exceptions, been acting better for the past few weeks, has reclaimed all key moving averages. So above what level might we see it pick up some power?
I think I would have liked it to expand a little quicker. This has been not, I'd say, a laggard group, but it hasn't been leading. So last week we were looking for some things to play catch up. And if you look at the chart of LVS, you will see to start the year, it had a really nice move. It had a gap up above a recent channel, then topped out, and now it's wedging a bit, trying to come above it. So I still think it looks fine. It's just not the Las Vegas Sands of old where you see really big moves. It's more incremental now. So I would say the longer it stays above, 51.75, the higher probabilities at some point it could take out 55.
And finally, there's, not finally, one more after this, but eBay finally found some support at its 100-day and bounced after a 3-day sell-off. So do you think we could see some more upside today?
I think people are looking for it because this has been a leader, and then all of a sudden last week it didn't act the way eBay's been acting overall. Could be just a temporary scenario, but at this point nobody really knows. All you know is that it did violate certain areas. This was, an accelerated trend line that it broke. So if you were trading it in size, this was a spot to get out of some. Then it came and tried to test a more gradual trend line. Bounced off it, failed, and then broke through it, and now it reversed a little bit on Friday. So I would say you have to be a little bit more careful with eBay than we've been in the past because you don't know if this is going to continue to the downside. At this point, you have resistance around 54.40. Here's your short-term support to trade against. So, if you got stopped out here, okay, or even here, you have the opportunity and the luxury to take a look there. But overall, it's acting a little bit more faulty lately versus what it's done in the past.
And what's the chances we could see YHOO make another move higher? It's flagging at highs and is holding above all key moving averages.
As you move higher and you get these base on base type moves, you just have to be a bit more careful. So I would just say do less size. The first real trade was way back here when it traded above this channel. You know why I love channels? Because it shows accumulation by institutions, mutual funds, you name it, and now is your breakout. From there, it had a clean move, then it got a little choppier. And if you recall, a week or so ago, we talked about this flag pattern above 21.50, and then look at the move. And now it's holding higher. I drew this on Friday's recap because I think there is potential that it starts to go again. So above 22.96, you can see additional move. In my 2013 thesis, I showed this chart and I said that we could see a target of 24 to 26, and we're getting close. And the problem is a lot of these targets are happening, within the first quarter versus over the course of the year. So you have to think twice on whether you have to increase your targets or you have to just take profits and and readjust.
So in summary, then, what are you focusing on heading into trading today?
Well, I think on Friday I came in long, like 10, 11 longs, and I left with only 3. Not because I'm bearish on the market, but some things I sold into strength and some things I got stopped out of because not everything has been created equal. So in the next 3 to 4 sessions, I'm going to see what digests and what I could put back on, what I could add to, and what the complexion of the market is. If we hold above 1540-ish in the S&P the next 3 sessions and turn up, I'll probably be back to 8 to 12 positions. So you should make sure you're watching my virtual trading floor, or you're seeing some of our our write-ups with the disclosures at the bottom, because you'll see what I'm putting it on, because I'm not always going to just be tweeting about it. But overall, I'm going to try and stay with the rally, but you need to massage it, you need to manage your positions, the amount, the size, your hedge in order to stay comfortable with it. And we did see some excitement into the end of last week, so typically when you see excitement, it's a reason for a bit of a pause.
All right, thanks so much, Scott. Happy trading, everyone. Have a great day.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.